We're starting to get a clearer picture of how President Trump's trade wars are impacting Americans' outlook about the economy. Some key indicators were released today showing growing confidence among consumers, even as hiring and job openings are starting to drop. CNN's Matt Egan is here to break down the numbers. So Matt, read the numbers for us in terms of how they signify what's happening in the economy.
Well, Boris, I think the latest reports show that everyone is still trying to adjust to this new world of historically high and volatile tariffs. And that everyone includes CEOs, small business owners, and yes, all of us as consumers. So this new survey out today from the Conference Board shows that the mood on Main Street, it did improve in July a little bit, right? Consumer confidence increasing by about 2% in July. But what's really notable to me is I went back and looked. Where was consumer confidence at this point of President Trump's first term? And look at this. Back in July 2017, consumer confidence was much higher. So this does show that, yes, consumer confidence has stabilized a bit, but clearly many Americans are not thrilled with where the economy is right now. When we look at some of the internals of this report, they were kind of mixed. Good news is that recession fears continue to come down. People are feeling better about the road ahead in terms of the short-term outlook, but they also marked down their views on the present conditions, in particular because of concerns about the job market. The Conference Board said that when they asked people about how available they believe jobs are, this metric fell for the seventh month in a row to the lowest level since March of 2021. Back during the COVID-19 pandemic. So I think the bottom line here is, yes, people are feeling better about the economy than they were back in the spring, but there is some underlying nervousness here, in particular about the job market.
Yeah, so tell us about this new report on job openings and hiring.
Yeah, that's right. We did get a new look on job openings. This is the JOLTS report from the Labor Department, and it showed that the number of job openings fell from 7.7 million in May to 7.4 million. So some context, that's more or less in line with expectations. It shows that the number of job openings, it's still well above where they were back before COVID-19, but it's also come down pretty sharply from 3 years ago when it felt like there were help wanted signs all over the place. And when we look at the job openings by industries, you can see there's still a lot of industries that are hiring. There's a lot of industries that they are very much in demand for workers, including retail, information, and local schools, public schools. But there was a significant drop in job openings in accommodation and food services. That's bars, restaurants, hotels, healthcare and social assistance. That has been a major source of job growth, but they significantly cut job openings in June. Also in finance and insurance. Another thing that really stood out from this report is hiring. It's been anemic all year, but it plunged in June to a one-year low. You see that hiring peaked back in April, and that's when tariffs really intensified. And you can see how it has come down. Hiring has slowed very significantly since then, and I think it makes sense, right? I mean, there's just so much uncertainty right now. CEOs, small business owners, they're trying to navigate through the fog of the trade war, and these days, it's hard to have any confidence where tariffs are gonna be at the end of the day, let alone the end of the year. Boris?
Yeah, that is a good point. Matt Egan, thank you so much for that. Brianna?
Let's talk more about this and what it means for the economy. With us now, economist and president of the Budget Lab at Yale, Natasha Sarin. Natasha, thank you for being with us. First, I do want to ask you, because we are just learning that these China-U.S. trade talks concluded without a clear path forward to avert tariffs from skyrocketing back to those super high levels on August 12th. How big of a deal is that? How should people be looking at this?
Well, it a little bit reflects what Matt was just describing about the nature of the uncertainty in the landscape at the moment. I mean, you've had Commerce Secretary Lutnick and other members of the administration be very specific that August 1st was meant to be this deadline upon which tariff rates would be set, and it would become clear to American businesses and American consumers what the new world order was really going to look like. The challenge, if you kick the can down the road first to August 12th with China and now to some indefinite future moment, is you're not resolving that uncertainty with respect to the most significant of the trading partners that we're trying to work through the trade war with. And that means that you're still in this sort of nebulous zone of not exactly knowing how to adjust or the ways in which you should think about investments, both in the United States, in other countries that are our allies, and with respect to an adversary like China.
So I wonder, what are you watching most as we're in this big week where we have these economic data points and deadlines?
Yeah, it's been called a monster week of data with respect to the economy, of course, because the Federal Reserve is going to be making a decision about interest rates this week. But then also we're going to get information about inflation and about the labor market trajectory later in the week that's going to help paint a bit of a picture about what exactly is happening as a result of the trade war that was launched in April. The pieces that I think are really important for us to look through and kind of start to disentangle are the ways in which these tariffs that at current levels are at about an effective tariff rate of 18%. That compares to an effective tariff rate when President Trump took office of around 2.5%. So that's a really substantial shift. Work that I've done with my colleagues at the Budget Lab at Yale suggests that as a result of that shift, you're going to see GDP be persistently lower by about 0.5 percentage points. That number, it's sort of hard to contextualize, but here's a pass at it. That's about $150 billion of GDP lower over the course of a year as a result of these tariffs. That translates to about a $1,000 loss per household as a result of the trade war. And that translates to fewer jobs in the economy because it is less likely that businesses are going to want to invest and consumers are going to want to buy things at higher prices. And we're going to start to get more information about all of those pieces of the chain over the course of the next few days. But we're also going to continue to get that information in the months and years, frankly, ahead.
Yeah, that's big money left on the table there. So this new consumer confidence report is telling us that actually, and we've talked about the uncertainty, but Americans are growing more hopeful about the economy. How are they seeing trade talks and tariff threats? And do you think that that is going to continue based on, what we're seeing with tariffs and negotiations and the fact that sometimes these indicators lag on that?
Yeah, I mean, I am hopeful as well about the American economy in that what we have learned thus far, many months in, as and Matt was describing it, effective tariff rates have changed on 40 days, 40 plus days in this administration. That's about once every 5 days. So we have seen a ton of volatility with respect to what the trade environment is going to look like. And yet the economy has been quite resilient. The labor market is quite strong. Inflation is ticking up, but still remains close to that 2% target. And that's given the Federal Reserve a fair bit of leeway with respect to how it makes choices with respect to the interest rate trajectory. The challenge from the consumer perspective, or the cause for optimism, depending on how you look at the coin, is in some sense that when this trade war was launched in April, things looked like they were going to be much more dire because we had tariff rates that were announced on China of 145%, on a whole host of countries that are both our allies and adversaries alike, at levels that have since come down somewhat as this negotiation has proceeded. And so I suspect we're in a world in which it looks like what the administration is gravitating towards is a baseline tariff rate of around 15% on most of the rest of the world. And that rate is really quite high. Those losses mean about $2,700 in increased prices for consumers. Those losses mean fewer jobs in this country and less growth in this country. But in some sense, it could be much worse if we had gravitated or remained towards those levels when the trade war was launched. And I think that's the piece that consumers are starting to reflect. But again, we're going to know much more over the course of the months ahead about the ways in which this is really impacting the American people's pocketbooks.
Yeah, but $2,700, I mean, so many people are not going to have that cushion, and we're going to see the effects of that. Natasha Sarin, it's great to have you. Thank you so much.
Thanks so much for having me.